Live from Washington, D.C., this is Balance of Power with Joe Mathieu and Kaylee Lines.
It's a rare presidential visit to the Federal Reserve. Welcome to the Thursday edition as President Trump brings his standoff with Jay Powell to a whole new level today, announcing a field trip, if you will, to the Fed's headquarters here in Washington that is currently under renovation. A controversial renovation, suddenly. I'm Joe Mathieu alongside Tyler Kendall in Washington. And Tyler, this is going to be an interesting pop-in by the president. We don't have a lot of details or even whether Jay Powell's going to be there.
Right, exactly, Joe. Still waiting for details, though we do know it's going to happen around 4 p.m. Eastern, and the president is expected to be accompanied by some of the harshest critics of the Fed in his administration. I'm thinking like the OMB director, Russ Vought, and Bill Pulte, the head of the Federal Housing Finance Agency.
They've been calling out this renovation for being over budget and overly ostentatious. Jay Powell's pushed back pretty hard on that. Pretty hard, but critics do point to the fact that the budget documents show that the renovations have ballooned to over $2.5 billion in costs. Jerome Powell himself has appointed an inspector general to look into the renovation costs. But importantly, the Fed says that media reports about the renovations have been inaccurate in those terms. Well, look, Donald Trump's no stranger to wearing a hard hat. I'm deeply curious to see what the optics are going to be. I'm assuming they take the motorcade. They don't walk. It's only a half dozen blocks from the White House. He is expected to address reporters while he's there. And I'm sure that the markets will be listening. Exactly. This is one of those events that could move the markets, which is why we're now going to check in with Charlie Pellet in World Headquarters in New York for the latest. Hey, Charlie.
Hi. Thank you very much, Tyler and Joe. Indeed, looking at a market right now, little changed on the S&P 500 index. To be sure, we've got the Dow lower. NASDAQ is advancing, all about earnings right now, with the S&P higher by 9, up by about 0.1%. Alphabet up, Tesla down after their results. The Dow down 222 now, decline of 0.5%. IBM weighing on the Dow. IBM after earnings down 7.5%. S&P up 9, up 0.1%. NASDAQ higher by 0.2%. Our Mag 7 index down 0.3%. Tesla weighing on that index. Tesla after earnings down just about 9%. The 10-year 4.40%. The 2-year 3.91%. Treasuries fell as jobless claims hit the lowest since April. Spot gold down $20 the ounce to $33.66, drop there of 0.6%, and West Texas Intermediate crude up 0.3%. WTI 65.43 for a barrel of West Texas Intermediate crude. Elon Musk is warning of difficult times ahead for Tesla, saying the company will be in a transition period for the next year or more. Tesla shares down now by 9%. Alphabet says demand for AI products boosted quarterly sales. Alphabet shares up 0.7%. McGraw-Hill first day out. It is lower after the company raised $414 million in its IPO. McGraw-Hill down now by 1.2%. Hulk Hogan, dead at age 71. He was an icon in professional wrestling who turned the sport into a massive business. Authorities in Clearwater, Florida say they responded this morning to a call about a cardiac arrest. They found Hulk Hogan. He was pronounced dead at a hospital. Hulk Hogan, wrestling icon, dead at age 71. Recapping, most stocks higher. S&P up by 10 points now, up 0.2%. Balance of Power continues now. Back we go to Washington. Once again, your hosts, Joe Mathieu and Tyler Kendall.
All right, Charlie Pellet in World Headquarters for us. Thank you so much. And of course, a big focus of today is going to be President Trump's impending visit to the Federal Reserve to tour some recent renovations to their headquarters here in downtown Washington. And administration officials are really latching on to this idea, these allegations that Jerome Powell misled Congress in testimony about this renovation project. The Fed says that he has only been truthful in his testimony, and we actually want to bring you part of what he did tell lawmakers back in June.
There's no VPI dining room. There's no new marble. We took down the old marble. We're putting it back up. We'll have to use new marble where some of the old marble broke, but there's no new. There are no special elevators. They're old elevators that have been there. There are no new water features. There's no beehives, and there's no roof terrace gardens. Other than that, so all of the sort of inflammatory things that the media carried are either not in the current plan or just inaccurate. So, but notwithstanding that, the cost overruns are what they are.
was personally curious to see the water feature. It is basically a construction site over at the Eccles building, not that far from the White House, around the corner on Constitution Avenue. If you showed up there right now, as the president will a short time from now, you'd see a lot of cranes and orange barrels and the like. There's quite a bit going on there, and it's not a great-looking place. This is a $2.5 billion renovation project, a deep upgrading of the guts of the, in fact, two buildings that make up the headquarters there. And I want to get into this, Tyler, with Kate Davidson, who helps to cover the Fed for us here and leads our coverage as managing editor for U.S. economic policy and has spent a bit of time in this building and knows the people who work there. Kate, it's great to see you. Thanks for joining us, as always, here. The building named for Mariner Eccles, who served as chair of the Fed 1934 to 48. This building has been sitting over there since the 1930s. And it was the pride of the Fed to hire a well-known French architect to build this structure and some pretty famous decorators to make this a nice place. Mm-hmm. What are we talking about here with all of these renovations? Is any of what we're hearing from the administration true?
Well, it's a little bit hard for us to know if any of it is true, right? I mean, I think that it is, worth noting that Chair Jay Powell did request that the Fed's Inspector General do its own internal review of exactly what went on with the building project. This is something that has been in the works for several years. It's something that, the president likes to talk about Jay Powell, but the entire Board of Governors approved this massive overhaul. I think one of the things that the Fed has been trying to talk about and reiterate is that this particular building, really the two main buildings that where the Fed houses its economists and staff in Washington, they really hadn't gotten a substantial overhaul since they had been built. This one in particular, the Eccles building, Powell is quick to remind people, never had a big top to bottom renovation. So there was a lot of asbestos removal and things like that, just bringing the building up to code. I think one of the points he made, and I think we heard him refer to it, the elevator, there's claims of a VIP elevator, and he'd said that was actually to accommodate disabled users of the elevator. And so I think there are a lot of things like that where perhaps on paper, they might raise some questions and some concerns. What is the point of this? What's the justification here? And the Fed is starting to share more information about that on this project that, as I said, has been going on for several years now.
Can you talk a little bit more about the backdrop that this pressure from the administration is coming from? Because we have heard some other criticism when it comes to Jerome Powell. What sort of led us to this point? I'm also really fascinated to hear your view on the head of the Federal Housing Finance Agency, Bill Pulte, who seems to be taking a lead when it comes to the renovations, and we know he's going to be on the tour today. Yeah, I mean, I think we can't overstate just how unusual all of this is, right? The head of the FHFA, I mean, that is a very big, important job, overseeing, mortgage markets and Fannie Mae and Freddie Mac. But Director Pulte seems, very preoccupied, very focused on what Jay Powell is doing at the Fed. And of course, that matters to mortgage markets. He had talked a lot previously, before talking about the building, talked a lot about rates being high and how that was harmful to homeowners and Americans can't get a mortgage, and it's Jay Powell's fault was the argument. But all of a sudden, yes, he started talking a lot more about the renovation. We heard, though, even a couple months back, Elon Musk had mentioned it in an interview in the Oval Office. Kind of stemmed from little noticed report that a former Fed economist actually had put out through the Mercatus Center, former advisor there, looking at these costs and the cost overruns, and the fact that it was a potential political liability for them. And as we're seeing, I think it has become one because, it's not just about what's going on with this renovation. It is paired with this criticism at the same time that the Fed is not lowering rates, and the president really, really would like them to be. So, sure you could look at this as, is this just them piling on? It certainly seems that way.
Can I, just to be clear, though, whose money is this?
Well, it's a really good question.
To pay for the renovation. Yeah,
the Fed is essentially self-funded. They have fees that they collect from banks. Their money, though, their appropriations are not approved by Congress like most federal agencies. They were set up in that way by design to be independent from that process, in part because Congress decided many years ago that they wanted the Fed to be somewhat walled off from political influence, right? To make the decisions for the economy. things that are in the best long-term interest in the economy, not short-term. Yeah. So they have this money. They have a huge portfolio of assets. All the bonds that they have bought through various rounds of QE to support the economy. Those bonds earn interest. They earn interest on the balance sheet, and they cover their operating costs, which could include renovations, include paying staff. Yeah. Whatever's left over in earnings, they send that to the Treasury. But with rates being so high the past few years, they're not sending any money to Treasury anymore. So that might be also a little bit of a frustration to officials in the government.
Mm-hmm. Really fascinating stuff.
It's a lot.
Bloomberg's, and you're on top of all of it. Bloomberg's Kate Davidson, our managing editor for U.S. economic policy. Thank you so much for being here.
Thank you.
And for more, we want to bring in our political panel. That includes Rick Davis, partner at Stonecourt Capital and a Bloomberg Politics contributor, as well as Adam Hodge, managing director at Pulpit International and a Democratic strategist. Rick, I want to start with you, and I want to just talk broadly about the optics here. There's this big tour at the Federal Reserve. We've heard the administration ramping up the criticism leading up to this. What should we be expecting from the administration when they arrive today that would help advance their argument when it comes to the pressure against Jerome Powell?
Yeah, I think you got to just think of this as sort of today's event in a long-running, sort of attack campaign on Powell specifically and the Fed in general. We've heard it from so many different people within the administration. Donald Trump, obviously, first amongst anybody, leading the charge on Powell as it relates to interest rates. But now, obviously, we have some controversy around the building. I've been in the Eccles building. It's over 100 years old. It's never been renovated until today. When I was in it, there was no renovation. You were a little embarrassed. It was a beautiful, stately building, but the Federal Reserve is in a building that was over 100 years old that had never been fixed up. That seems like a real incongruity. That being said, no excuse for overruns. And at some point, you got to think of it as taxpayer dollars, regardless of who's actually writing the check. And so I think that this is a fair criticism, and I think Donald Trump has just taken advantage of it. He is good at optics, and that's what today is all about. It's all about the optics.
Rick, I don't know if you were with President George W. Bush when he went to visit the Federal Reserve Building. That was in 2006. That's the last time a president of the United States made the trek over to headquarters. And Adam, that means that Donald Trump becomes only the fourth. That's how rare an occasion like this is. What is it exactly that he plans to do there? We don't know that Jay Powell is even going to meet him. Is this anything more than optics?
No, it's clearly optics. I think there's no question that he is just trying to own the moment. And Trump, let's not forget, is a building guy, right? He's
going to be right at home.
This is what he loves more than anything else.
Inspect the rebar.
Yeah, I can't help but take a step back and think, Trump is also spending a lot of taxpayer dollars to turn over the Rose Garden and make it more like Mar-a-Lago. He's done a lot of renovations in the White House, putting a lot of gold everywhere. So he's done a bit of this himself.
Quite a bit.
But I think the reason why this story actually matters is to where Rick was getting at. It undermines the credibility of the Fed chairman if the president is browbeating him. And I think it really potentially undermines whoever Powell's successor is in 2026. Trump has been clear he intends to appoint someone else. And you got to wonder if he's just going to walk over every time he disagrees with a rate decision to pressure him into making a different decision. That's why this matters.
Well, actually, to build off of this, the Treasury Secretary, Scott Bessent, was on Bloomberg surveillance earlier this week and was asked about President Trump's intention, since he does say that he's going to let him serve out his term through May of 2026. Right. And we want to play you both a little part of his answer and get your reaction on the other side.
The president said he is not going to fire Chair Powell. It would do Chair Powell a favor, and he would be doing the institution a favor if he did an internal review. This mission creep from the Fed is endangering their independence of monetary policy.
To Adam's point before, Rick, when it does come to perhaps threading the needle, or how do Republicans and the administration thread the needle here when it comes to a potential replacement for Jerome Powell, if we know that some of the candidates that they're looking for would potentially come from within the administration?
Yeah, look, I think that that's going to happen no matter what by May. And so the real question is, in the ramp up to the replacement of Powell, under normal order. How much more heat can the president really pile on? And even though the Treasury Secretary was less argumentative about replacing Powell, Howard Lutnick came out the same day basically and said he ought to be replaced or he ought to resign. So like the administration is all over the map on the speculations around Chairman Powell. And I would say what's interesting is that clip echoes more the traditional Republican sentiment about mission creep with the Federal Reserve, especially as it relates to DEI, as it relates to climate, issues that the Federal Reserve has dealt with that Republicans felt weren't in their mandate. So we're sort of like, recreating the last decade of debate around the Fed. And as a result, again, more pressure, being put on Jay Powell. He's a tough guy. He can handle the pressure. It doesn't really affect him and his decision making. It's not the first time, he's been in the cooker. And so assuming that the president is staying the course, a lot of this is just good summer theatrics.
Well, unless they find a shrine to the Grateful Dead that they're building over there, Adam, I just wonder what today could lead to, and if this might blow up in the president's face optically. He's going to show up at a construction site. There's a bunch of broken concrete over there right now. They're not going to find lavish offices, VIP elevators, and fish tanks. So how's that going to play on TV?
I don't think it plays on TV to the broader public, but to his base. Mm-hmm. This is red meat that
so it doesn't matter.
I think that's where it's important to remember who the audience here is. For Trump, for the White House, it's not the markets, it's not the place, it's his supporters. Mm-hmm. And so I'm old enough it was years ago, but when I worked at the U.S. Treasury Department in the Obama administration, there was almost a church and state relationship with the Fed. The Fed did their job in monetary policy. We were responsible for fiscal policy.
You couldn't get anyone to even comment on the Fed.
No. And when they talked about the dollar, we'd get all up in arms about it as well, right? So that's the way it works. The fact that they're putting this pressure on the Fed, I think, is really problematic, and it really does, I think, potentially pose problems for the credibility of the Fed and the certainty that the markets will take on Fed policy in the future. That, again, I keep coming back to that. That's why I think this matters. Mm-hmm. When they make future rate decisions, is it because the White House told them to, or is it because they actually think it's in the best interest of the American economy and the global economy? And if you get to that weakness, that doubt, that is bad news for the U.S. economy.
Rick, just in our last 30 seconds here, Joe brought up next steps. And one of the potential next steps is that the administration is pushing for Congress to actually investigate Powell's testimony. We played a little bit at the top of the show there. Bill Pulte told us on Bloomberg TV last week he's confident Congress is going to investigate. How much sway does Congress actually have here? Could they play a role in this going forward?
Yeah, I think it's a cog in the campaign, but it's not like they're going to have much of a material impact. They don't control the budget for this. So typically they could put hamstrings on the funding. They're going to drag up a bunch of people from the Fed, from the National Capital Planning Commission, folks who are actively involved in the building. Look, it shouldn't have happened, right? There's $500 million that's going to this that wasn't originally budgeted. They should have had a tighter control on that. But we also know there's been inflation and price of construction materials has gone up. So how much is really going to come about all this? I wouldn't hold my breath for a breakthrough scandal, especially in the midst of all the rest of the things that they're investigating currently. This is not going to show up much in the American public psyche.
We're going to find out together. Great analysis from Rick Davis and Adam Hodge. Many thanks to both of you. That tour is scheduled for 4 p.m. Eastern time. And of course, when it happens, you'll see it and hear about it right here on Bloomberg TV and radio. Straight ahead, our conversation with the Congressman from Virginia, Suhas Subramanyam, the 10th District, as we talk about the fallout here in the Epstein case. It's straight ahead on Bloomberg.
It's shaping up to be a busy day in Washington, but the House is already out. They're heading out for recess of August, a month long.
You can tell summer's here. All of a sudden, there's no traffic when the House goes on August recess. Last night was fly-out night. They decided to leave early, Tyler, as we told you this was coming. following some Democratic demands to get a vote on releasing the Jeffrey Epstein files. Speaker Johnson wasn't having it and sent basically everyone home early.
It appeared that they were trying to avoid some controversial votes here when it did come to the Epstein files, hoping that perhaps this August recess could dissipate some of the outcry that we saw. But of course, lawmakers are in the middle of working on some really other crucial pieces of work that includes funding of the government, the appropriations process. And we had the chance to ask Congressman Brendan Boyle of this yesterday, ranking member on the Budget Committee, about potentially the future here of how this could become a showdown come the fall. We want to play you some of that tape now.
There is no question that another rescissions package from this White House is them essentially saying we want a full government shutdown. Russell Vought, by the way, last week, let's not forget what he said. He said the problem with the budget process is that it's too bipartisan. So he's outright saying that they want a government shutdown and they want to force one.
All right, now let's remind everybody, Brendan Boyle is the ranking member on the House Budget Committee. When Brendan Boyle says one more rescission, you've got a shutdown, that is meaningful. Remembering the government runs out of money on September 30th. We don't have spending bills ready. There's no agreement on top lines. And as we started here, lawmakers are now beginning to leave town. Senators will go through next week, it looks like, working on nominations. Maybe they'll get a couple spending bills in the works, but that's a far cry from a deal on a budget. And that's where we start our conversation with Congressman Suhas Subramanyam from the 10th District of Virginia. That's not far from here in Washington, Northern Virginia, a district full of federal workers, I will add. And Congressman, it's great to have you with us from your view on the Democratic side of the aisle. I want everyone to know that you're on the Oversight Committee. You're also on Committee on Science, Space, and Technology. And I want to pick through a couple of these things here. I will ask you about what happened on the Oversight Committee with regard to Jeffrey Epstein. But start with us on a shutdown, Congressman. I know Democrats are angry about the rescissions package. Is Brendan Boyle right? One more and you're done?
He is. I think the reality is that it's one of our few pieces of leverage when it comes to being in the minority. And I represent a lot of federal workers. I just talked to a federal contractor who would actually go without pay during a shutdown. And he told me, shut the government down, because they're shutting the government down anyway. What OMB and what Russell Vought is doing, what all these folks are doing is they're basically firing people left and right and moving agencies now out of our region, and which would devastate the agencies as well as the American people who they serve. So we should use our leverage and try to get a bipartisan deal, because otherwise they're just going to continue to do these cuts, and it's basically shutting down the government anyway.
But, Congressman, when Democrats are trying to rally around a message, does potentially threatening a government shutdown, could that backfire here? Because isn't that going to be fodder for Republicans?
No, I think there's a lot of people who are angry at this administration. There's a lot of different reasons why they're angry. Take the one big ugly bill or the rescissions package, whatever you want to point to as why you're angry, even Epstein. And people want us to be a little more forceful, actually. I think people are upset with the Democratic Party right now because we haven't used our leverage when we could have. And so I actually think that people will reward us for trying to fight back at what this administration is doing.
It's been interesting to watch your Oversight Committee. And part of the reason why you're home right now, as we were just discussing, Congressman, is the Speaker's decision to get out of town a bit early and put off the Jeffrey Epstein situation, suggesting that the administration needs some time and some space to go through some of the documents. It's unclear exactly. Maybe you can tell us a bit more. But I don't want to make this whole interview about Epstein. It's just hard to ignore the headlines today. You've got a senior Justice Department official expected to meet with Ghislaine Maxwell in Tallahassee, where she's in prison. And in Congress here, just as the House was taking its final votes ahead of the recess, a Republican-led motion here on the Oversight Committee, it was a motion, by the way, it was from a Democrat from Pennsylvania, Summer Lee, on this Republican-led committee, in fact, was passed with 3 Republicans to release documents, subpoena the DOJ for documents related to Jeffrey Epstein. Is that going to happen when you come back to town?
It should, because the committee voted to do so. So if the committee's doing its job and following the rules, then it should actually happen. The bigger thing is this is a crisis of the president's making. He campaigned on a cover-up of some sort of these files all last year and then said that they had it on the AG's desk ready to give out. And now, given his reaction to some of these things, as well as his reluctance to release the report, I kind of want to know whether the president is in them, and if so, to what extent his relationship was and how complicit he was with what Epstein was doing. And so there's a lot of questions to answer. And this is all the president that brought this up. He's the one that peddled this conspiracy, and he created an administration of people who peddled the conspiracy to get elected.
Well, Congressman, I just want to follow up a little bit more on that, because I know that you wrote a letter to the Attorney General, Pam Bondi, looking for additional information here. What exactly were you seeking, and did you hear back from the administration on your request?
Well, I wrote that letter because Elon Musk tweeted that week a lot of things in opposition to the president, but one of the things he tweeted was he had some sort of special access to the Epstein files, and the reason they haven't been released is because the president is in them. And so I simply said, why does Elon Musk get to see the files or have knowledge of the files, and we don't as members of Congress? And so I simply asked the AG, well, if you're going to share them with Elon Musk, then share them with the rest of the country. I didn't get a response on that. The other thing is, we're adjourning. I'm 40 minutes from the Capitol. I'm ready to go back anytime. But I do think we should be going back and not just working on the Epstein files, but, we didn't do anything to lower costs. We didn't do anything on trying to help people who are losing their access to health care. And so there's a lot of things that we didn't do this summer and this past 6 months that we should be doing. And I think recessing this early, is really, a bad look for this Republican leadership.
I know there could be some interesting town halls in the weeks ahead, Congressman. You're the ranking member as well on the Oversight Subcommittee on Military and Foreign Affairs. So I have to ask you about this report from the Washington Post that I suspect you've seen. The Pentagon's independent watchdog says it has received evidence that messages from Defense Secretary Pete Hegseth's Signal account, talking about the bombing raid in Yemen, were in fact from a classified email labeled secret non-foreign, making reference to being off limits to foreign nationals. Is this something you're going to investigate in your committee?
Yeah, absolutely. We've already started trying to investigate. Obviously, we don't have subpoena power being in the minority, but certainly we have to look into this, and it should be bipartisan because this basically contradicts everything the administration was saying, and particularly Secretary Hegseth, that they weren't sharing classified information on the Signal chat. Now, we felt like they were, and it's pretty clear that the information, the kinds of information they were releasing were, in fact, putting our troops in harm's risk. And so this simply confirms what we were saying, which is that this is absolutely classified, and the secretary absolutely should resign, and really created a violation that would get anyone in the military fired. And so I represent a lot of military families and veterans and people who work at the DoD, and they would get fired over this, but it seems like the secretary is above the law, or thinks he is.
Just to quickly follow up on that, will the chairman of the committee, the Republican chair, allow you to pursue this?
I've also asked the House Republicans on the committee to pursue this, and they've simply shut it down. And I think they see it as their job to cover up for this administration, even when they don't agree with the administration or when they acknowledge that a mistake was made. And so in this case, it seems like they're not going to do any investigating. They simply want to relitigate conspiracy theories rather than actually trying to investigate this administration and things that it's doing to hurt the American people.
Congressman, I want to pull on a little bit of your expertise here, because I know that you served under the Obama administration as a tech policy advisor, and I want to talk to you about some other news that we saw this week, including President Trump launching his AI initiative, looking to perhaps loosen some of the regulations, speed up energy production to meet AI demand. I'd love your thoughts on his plans, including when it comes to the future of artificial intelligence, trying to keep the U.S. ahead of China. Is this an area where you see there could be some sort of bipartisan work going forward?
It has to be bipartisan. I think we do have to make sure that our country is a leader on AI. We also need to make sure that our workforce is prepared both for the jobs that AI has already and may continue to displace, and jobs that will be created by AI. And so, we're talking the AI we have now and will have in the future will need human components and humans to help navigate it and control it, essentially. And so I think the workforce pieces in there have to be bipartisan, and I did like them. There's some stuff in there I really didn't like. I mean, one of the things that places like China are doing is trying to control their people using AI. And there was sections of the report that talked about wanting to stifle certain types of speech and algorithms that might be quote unquote politically biased, but what they meant by that was basically algorithms that were not friendly to the president's viewpoint. And so I'm concerned that this administration, doesn't like truth when it contradicts their narrative, and they're going to use AI to basically try to push a new narrative, and we have to make sure we're vigilant about that.
Congressman Suhas Subramanyam from the data center capital of America, the state of Virginia. We thank you for the time here, only on Bloomberg.
We're always watching for tariff updates here at Bloomberg. Joe, news yesterday, Japan had clinched an agreement at 15% for its baseline rate, but also lowered it to 15% when it came to autos. And our eyes are now looking towards a high-stake meeting later this week with South Korea and whether or not we could see some other framework deals emerge. But something does appear to be emerging, and that's a trend when it comes to the baseline rates that we're seeing implemented. And it appears that it might be ticking higher than previously thought. For that, we're going to play you some sound from President Trump last night outlining the range that these rates could reach.
We're going to have a very, very simple tariff for some of the countries. There's so many countries you can't negotiate deals with everyone. So we'll have a straight, simple tariff of anywhere between 15 and 50%. A couple of we have 15 because we haven't been getting along with those countries too well. So we just say, let's pay 50. And that's the way it is.
I'll remind everyone that August 1st is a week from tomorrow. At times like this, we spend time with Edward Harrison. He's the force behind the Everything Risk newsletter and has a keen sense of what's happening in the bond markets and the elements of this whole tariff and trade story. Edward, it's great to have you back on Bloomberg TV and radio, as always. Markets seem unfazed by most of this right now. So when you consider everything risk, it's been pretty risk off, even in the face of this uncertainty. We're a week out, and you wouldn't really know by looking at Wall Street. Maybe a little bit different in the bond market. How are you seeing this?
Yeah, Joe, I think it's interesting because if you look at the economic data, jobless claims in particular, what you've seen is that jobless claims go down 6 weeks in a row. And when you saw the CPI that came out recently at 2.7%, basically it told traders, look, everything's fine. Tariffs, they don't matter. We've gone from 2.3% on average to potentially 15% and higher, and nothing's happened. I think that is probably premature, but this is a market that wants to go up, and it's going to go up until the data tell the market that there's a reason to go down.
Well, you write, to build off of this, that only the actual implementation of worst-case tariff outcomes are going to shake this market. What are those worst-case outcomes, and how likely, in your view, could we be teetering towards them?
Number one, I don't think that we're going to get those, and two, I don't think that the data, or rather that the data that we've seen so far is representative of what will happen once the tariffs are actually fully baked in. So the worst-case outcome that I'm looking at is sort of more of the, let's say, 20% variety. I think that Trump, he's already signaled that he's not willing to go that far. It's interesting, at one point, I think earlier in this week, or it was last week, he said the baseline tariffs could be 10 to 15%.
Yes.
We don't know, we haven't figured it out yet. But the market's at new highs, so that shows you that actually my policy is very good. Then markets kept on going up. As a result, he decided, let me go with 15%. So now we're at 15%. I think that's about as high as he's going to go.
Even Howard Lutnick the other day on Bloomberg said, we're right up at the line. 15 seems to be the line, maybe before you start to see some real destruction. But Edward, what's got you more concerned, the tariff rates themselves or the idea of extending this deadline all over again?
I think it's the tariff levels themselves, because ultimately, once the tariffs are at this level, eventually 3-4 months down the line, we're going to get all sorts of impacts with regard to pass-through of inflation, or at least the price level step up that people will talk about. And we're going to see whether or not consumers actually will be able to stomach those higher prices.
All right. Edward Harrison, we thank you so much for joining Bloomberg, and we want to continue with this conversation now with Natasha Sarin from the Yale Budget Lab, also a former senior counselor to former Treasury Secretary Janet Yellen. Natasha, I'd love to bring you into this conversation here as we are seeing that baseline tariff rate potentially shift. It now looks like President Trump outlining that we could see it around 15%. How is that changing your calculations when it comes to a universal tariff rate?
So we put out some estimates yesterday from the Budget Lab at Yale where we took stock of essentially where we are, inclusive of this new Japan framework, and concluded that effective tariff rates, if they were to go into place at the levels that have already been stated for the deals that have been reached, are going to be at over 20% as of August 1st. And so that's a pretty substantial difference relative to the 2.5% when President Trump took office. The result of that is we expect to see prices increase for households on an average of about $2,700 per household. And those increases are going to be concentrated in particular industries where the tariffs really have the greatest bite, right? So they're going to be a 35% increase in apparel prices or a 12% increase in consumer electronic prices. And I think, and to sort of pair off on some of the discussion you were just having, part of the reason you're not seeing that yet to that magnitude in the data has to do with the fact that in a lot of these industries, apparel is a good example, what happened in the lead up to these Liberation Day tariffs was an understanding that the president was going to shift up these rates very substantially. So inventories rose really dramatically. People tried to bring in a lot at lower tariff rates with the cognizance that high tariffs were going to come. So I suspect we're going to start to see some of these price increases over the course of the months ahead. And indeed, if you look into the CPI, you're starting to see a little bit of that already.
It's really interesting when you combine the impact of front running, as you're suggesting, with maybe a reluctance, at least in the beginning, for companies to pass along higher prices. They're trying to absorb this within their profit margins to the extent that they can. This is really interesting, though. You put such a fine point on this. $2,700 more in costs for 2025. Is this then all backloaded to the second half of the year or the fourth quarter? When does it hit?
Well, it's interesting. It's sort of hard to predict exactly what these are. Sort of our estimates are based on trade models that provide the capacity to do that kind of granularity. But of course, it's kind of hard to predict with every twist and turn of this. And ultimately, it's hard to anticipate where exactly these tariff rates are going to land, because, of course, you know, Howard Lutnick has said August 1st, it's a hard deadline, but the president has also said countries should feel free to come and continue to talk to us after that date. So in some sense, like, timing this and understanding how businesses are going to respond and how consumers are going to respond is like a hard thing to do, because it's difficult to know exactly like what the environment is going to be just a few weeks from now, let alone what the environment is going to be a year from now. But one thing I think is like really interesting and important about some of these impacts is that they're going to ultimately have a lot to do with how the Federal Reserve responds to the increases in tariff rates that we've seen over the course of the first 7 months of the administration, because these price effects could show up in the form of price increases as inflation rises and prices rise, or if the Federal Reserve doesn't look through these tariffs, they could also show up through a decrease in nominal income. So in some sense, we're in like a bit of wait and see.
Natasha, I also want to ask you about growth outlook, something that the administration is very focused on. Your report finds that U.S. real GDP growth over 2025 is 0.8 percentage points lower from all 2025 tariffs. In the long run, you write the U.S. economy is persistently 0.4% smaller, the equivalent of $135 billion annually in 2024. Put this into perspective for us. Just how much is this when we are looking at bigger clear growth targets from this White House, they say will come with their policies.
Well, what's important to appreciate, and we've talked about before, is like a way to understand the tariffs essentially is that they're a form of a tax. And so taxes, not in all circumstances, but in many circumstances, tend to have distortionary effects and can impact economic activity. What the tariffs are doing is they're shifting activity into sectors of the economy that are less productive than other sectors of the economy where America really has its utmost strength. And so the result of that is going to be a persistently smaller economy, both because we've done this sort of inefficient shifting into particular sectors, but also because we've raised prices, we've lowered demand, we've decreased the incentive for businesses to invest and grow. And so all that is going to come with really substantial economic effects in the medium run and also in the long run, because these aren't tariff rates that are going to kick in just for a short period of time. The idea, at least that some in the administration have articulated, is these are revenue raisers that are going to raise $2.5 trillion over the course of the next decade.
Love your take on the job market here, because you ran numbers on this as well. Remembering this is part of the promise of tariffs, the idea of reshoring businesses, bringing jobs back. You say the unemployment rate would go up by about a 0.5 percentage point this year, and payrolls could be almost 600,000 positions lower. What about tariffs bringing jobs home?
It's so interesting because this is also sort of like sector specific in some sense. So as you're trying to reshore in manufacturing in particular in ways that are kind of frankly quite difficult to do in the short to medium run. So some of this has been, we want Apple to be making iPhones in the US. Like they actually physically do not have the production capacity to do anything like that. But let's say even that they did. The result of bringing some of those jobs in is going to be some of these broader economic trends that we've discussed, which is that prices are going to go up and people are going to consume less and demand is going to be lower. So in other sectors of the economy, there's actually going to be less demand for employment and less demand for business investment, such that in aggregate, you're going to see employment at lower levels, even if in particularly favored sectors, you manage to get a little bit of an employment boost. But even that's hard to do because these manufacturing jobs, they use intermediaries like steel and aluminum, so prices are rising on those as well.
Right, just quickly in our last minute here, can you actually speak about the impacts from the sector-specific tariffs like steel, like aluminum? We're talking about car makers, automakers, and how that's phasing in to the picture here, because those tariffs are enacted on a totally separate legal basis from the so-called reciprocal tariffs, yet they still make their way into all of these discussions that we're talking about for the overall tariff rates for our trading partners.
Yeah, and it's so interesting. And at some point, it would be so great to talk through some of the legal dynamics here, because we're kind of on questionable legal footing for a lot of the tariffs that we've described, because in theory, they're supposed to be associated with emergency moments, and it's hard to argue that there's any such exigency at this point. But for some of those sector-specific tariffs, I've thought it's kind of complicated to make the argument for them. If you're trying to say that we need to do more car manufacturing in the U.S., more of the Fords, more of the GMs, well, they're actually very heavily hit by some of those sector-specific tariffs because 60% of car parts are actually imported into the U.S. And so there's a bit of a puzzle with respect to how you aim to accomplish some of these goals and even boost manufacturing, as the administration claims they're trying to do, if what you're actually doing is making it harder to do some of that manufacturing because you're making it more expensive in these particular industries.
Natasha, it's great to have you with us, and we appreciate your insights. Professor at the Yale Budget Lab with new research to share with our viewers and listeners today on Bloomberg. Natasha, Sarin, thank you so much for the insights. I'm Joe Mathieu in Washington alongside Tyler Kendall as we wind things down on the early edition of Balance of Power. We just heard from the president, Tyler. It's not about Jay Powell. It's about Hulk Hogan. As you might have learned earlier on the broadcast, Hulk Hogan died today at 71. Donald Trump, a big friend, on Truth Social. We lost a great friend today, the Hulkster, he writes. Hulk Hogan was MAGA all the way, strong, tough, smart, but with the biggest heart. He gave an absolutely electric speech at the RNC that was one of the highlights, he writes, of the entire week. Entertained fans around the world. The cultural impact President Trump says he had was massive. Tyler will meet you back here a little later. The late edition of Balance of Power starts 5 p.m. Eastern, only on Bloomberg TV and radio.